On behalf of CrossCheck Media and Biz Talk Today TV, welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in Scottsdale, Arizona. And Toby, we have the right guy to talk about all kinds of things that are pressing right now. We can talk about the BOS revisions, the Fed, inflation, even why the Bears broke down in the fourth quarter.
No. I want to talk about the tweets. Bianco, what was with the tweets?
Well, we're going to get into all of that because we have with us today Jim Bianco. He is the president of Bianco Research in the greater Chicago area. And Jim, welcome back to Buy, Hold, Sell. I know you're probably still getting over that game last night, but let's talk about these BOS revisions before we get into Toby's tweets. I got to ask you, 911,000 is going to be the difference now. Does this make a difference, though, in the Fed decision making for next week?
It shouldn't. And I'll tell you why. The 911,000 is from April of 2024 through March of 2025. So this is data that is almost 2 years old. And by the way, this is a preliminary estimate. They won't change those April 24 to March 2025 monthly payroll reports until February when they put out the final estimate. Last year, they went 818,000 down in the preliminary estimate. And when they got to February, when they changed the numbers for 23 to 24, it was only 600,000. So it can change a lot. So this is data. This is basically saying to you that the job market was weaker before the election is what we're talking about. And that's why, in theory, it shouldn't really matter for the Fed. But there is an interesting argument that's going around because the BLS floated this in their explanation. They said, why is there a big revision down? What they do is they look at tax returns and unemployment insurance. And they said the number of jobs that companies told the surveyors at the BLS was higher than the number of people getting withholding or qualifying for unemployment insurance. Why is that?
What is that, Jim?
Undocumented workers. That's what it is. And that is the argument that they're making, is that actually those jobs exist. They weren't paying taxes, is why that revision is coming to the number. And that's why that revision could go higher, be less so in the future, because we're going to find out that those jobs do exist. They just weren't paying taxes on those jobs, which gets into the whole immigration debate. And remember last week, Trump had that big raid on the Hyundai factory outside of Atlanta because they were employing a lot of undocumented workers as well. So it comes right back to one of the two big issues, right? Tariffs and immigration. They kind of permeate everything. But like I said, I think this is a revision for a lot of data from before the election, so it shouldn't really impact the Fed that much.
Well, Jim, where do tariffs come in? Obviously now we're in this like tariff nowhere land, where first off, do you really think we have to pay back the $210 billion, or do we just write them a check from a bank account?
So to answer that question, obviously the Supreme Court's going to rule on it. The estimates are probably by the end of the year. The idea is there's two schools of thought with this. One is that the Supreme Court will rule in favor of Trump. Okay, we'll see. But the other one is the problem is that Trump was using an emergency authority.
Right.
Because normally you got to have a tariff be passed by Congress, except if you have an emergency. And then they said, okay, well, what's the emergency? And they said, well, the trade deficit's the emergency.
I thought it was fentanyl. Wait a minute.
Well, no, this is for tariffs. For tariffs. The trade deficit. And wait a minute, 58 of the last 60 years, we've had a trade deficit, but now all of a sudden it's an emergency.
Right.
But even if they ruled that, no, you can't use the trade deficit as an emergency, then Trump could turn around and say there's other legal means. He could say, okay, then they all fall under this other bucket in this other rule, and everything just continues the way it does. But we'll have to see how this plays out. But I don't think that necessarily. I would bet that they're probably not going to rule against him and say you're going to have to pay back the $210 billion that you've collected so far.
But if they do, Jim, what kind of an impact does that have on the economy? There's got to be a ripple effect on the GDP.
Oh, it has an immediate impact on the economy, and it's big negative because basically what's going to happen is they're going to have to issue $210 billion worth of bonds to pay back the money, and they'll just drive interest rates, and I'll say this to my crypto guys, friends. They will issue $210 billion worth of bonds immediately to pay back the money. And then you'd say, my crypto friends say, who buys bonds? Why does anybody waste their time with bonds? That's a loser game. Okay, fine. But we need $210 billion worth of buyers. Well, you're never going to find them, is what they say. Oh, yes, we are. We're going to take rates up and up and up until we destroy everything else, until you wind up buying my $210 billion worth of bonds. Wow. There's an old line in the bond market, Toby, right? There are no bad bonds. There's only bad prices.
Only bad prices.
So what I'm saying to my crypto friends is, you just don't like the price of the bonds. I could keep lowering the price and raising the yield and destroy everything in its wake in order to get you to buy the bonds. That's why I said it's immediate and bad impact.
Yeah, don't explain the bond market to the crypto guys because they get crazy. But I would say though that really the stable coins are sort of the out here, because the stable coins have to buy so much bonds now to stay with their net asset value. Maybe the crypto guys help the bond market, Bianco. What do you say?
Yes, that is in theory possible, but what they're banking on with the stable coin argument is everybody's going to buy stable coins. They're going to hold them on crypto. They're going to use them like you use dollars now. You're going to be buying stuff with them. You're going to be trading with them. I understand that. But where's that money coming from to buy those stable coins? It's coming out of a traditional bank account and going into what was the traditional bank account backed by? A treasury. When you move it into a stable coin, it's going to be backed by a treasury. The net impact is going to be very small on additional buying. Now, where it can be a big deal is if those stablecoin buyers come from foreign countries,
right?
Third world countries, Latin America, Africa, Middle East, Southern Asia, that they need, oh, wow, I could go on my phone and I can buy an equivalent of $1 and move my Chinese yuan into it, or, move my renminbi into it or whatever. Yeah, that could be the case. But here's the problem. I just said Africa and Latin America and Southern Asia, there's no money there. I don't mean to be crass about it, but there's not a lot of money in those areas that's going to really move the needle a big way. So in theory, it can be, but I think what you're going to see is $1 trillion come out of the bank accounts, $1 trillion go into stable coins, and the net purchase of treasuries is zero. It's zero. The same. It hasn't changed anything.
Yeah, zero-sum game. Hey, it's a really interesting point. I mean, just switch a little macro here, though. Are you seeing a recession scenario? Any plausible recession scenario here?
No, I'm not seeing it, and I'm not. And I got to also maybe mention how I view recessions. I think the natural state of a capitalist economy, and I know we like to make fun of it, but it's still a capitalist economy, is to grow. Now,
not in this show, Bianco. We do not make fun of capitalism.
Right.
Jeez.
It's to grow. It could grow slow. It could grow fast. You could have some sectors in recession, others not. What is a recession? It's an exogenous shock that gets everybody to say, it gets everybody to use that technical term, holy shit, I'm going to stop buying stuff because something bad happened. You told me to go home because everybody's going to die from COVID. My house price is crashing. Somebody attacked somebody and the price of crude oil doubled. That's the holy shit moment. Now, I thought we had a couple of them. 2023, Silicon Valley Bank failed. That was not it. Liberation Day earlier this year looked like it might have been one of those moments. That was not it. So short of that, we're not going to have a recession. Now, could we grow slow? Sure. Could we have a housing recession or a manufacturing recession? Sure. But I still think that the economy will continue to move forward.
Well, hold on, Toby. Yeah. But if the Supreme Court says that the tariffs are illegal, does that change your opinion?
That could be a holy shit moment, because you got to issue $210 billion worth of bonds, and you're going to have to destroy the stock market in order to get them to suck $210 billion out of the stock market. to buy those bonds. That could be one of those if you wind up getting it. Look, at any moment, something bad could happen in the Middle East and the price of crude oil goes up 50%. That could be, that's not happening now, but you don't know when or if that will happen. So it's, something along those kind of lines. Maybe we have another pandemic or something like that, but it's some kind of an event like that that gets people to say, I have to change my behavior. Now, it's not tariffs because they've been around now for many, many months. And if you haven't changed your behavior yet, you're not going to.
You just make a great point. It is, as you say, now this is etched in stone for the rest of your life, Bianco, the holy shit moment, the HSM,
Yes.
that teeters, because we have this balanced economy. I mean, it sort of drives me nuts when people are saying, oh my gosh, people are going to stop buying products from China because they have tariffs. Well, products are only, 18 or 16% of our entire GDP? All of our GDP is healthcare and services and government, et cetera. So how does a 25 basis point increase change people's service consumption? It does not. Other question for you, though, is how about housing? Where do you see, if you see these cuts coming, do we maybe get a reprieve on mortgage rates?
Yes and no. Yes, you get a reprieve on mortgage rates for a little while, and it's not going to last. Let me give you my line about housing. Every single day we've been alive, and every single day we are going to remain alive, housing will be in a crisis.
Yes.
It is because it's in one of two states. Either it's home prices are going up, which they are now, and they're at all-time highs, which they are now, and you have an affordability crisis. No one can afford a home that doesn't own one. Or home prices are going down like they did in 2008, and you have a financial crisis. So what we've got is we have home prices going up. Why do we have home prices going up? Because before the financial crisis in 2009, we built 1.5 million homes a year in the United States. Since 2009, we've built 1.1 million homes a year. I'll bottom line it for you. Since 2009, Bloomberg says there's 20.5 million new households in the United States. There's only 18.5 million new homes in the United States. So we have a shortage of homes. The price is all the way up at the moon, and that's why no one can afford it. So what happens when you cut the rate? Two things happen. They cut rates. All the mortgage brokers call up everybody and say, guess what? You were going to pay $3,500 a month for that house, with mortgages and insurance and upkeep and everything else. Mm-hmm. Now you're going to be $3,100 because mortgage rates went down. And then they go, great, let's put a bid on the house. And you go, okay, let's put a bid on the house. Oh, wait a minute. They just raised the price 15%. Right. And you're back to paying $3,500 a month. So if the problem is you can't afford $3,500 a month, cutting mortgage rates isn't going to get you down. They're just going to raise the price, and you're still going to end up paying $3,500. We need more units. And the problem with more units is, and I'll get very, like old boomers that live in Arizona. Is there anybody here we know that might qualify under that?
Hey, I know somebody.
Yes. What happens is they move to Arizona.
A rotary phone.
Right. They move to Arizona. They buy a home. And then either they or their neighbors go to the zoning commission laws and say, no more homes in my neighborhood. You're right. If you want in my neighborhood, you got to overpay for my house. But we're not going to let a builder build 3 more houses down the street from me to compete with me. That's the problem. We have too many rules and regulations on housing in order to get enough units into the country. Now, possibly what could fix this is the borders closed. And population growth is way down, but that's going to take a couple of years in order to kind of, fill in that gap of that extra 2 million homes. Yeah. But it's possible that we fix it that way. But like I said, that'll take a little bit of time.
Yeah, Bianco, let me tell you, the guys that are sliding over the border into Scottsdale, Arizona are not paying $1.3 million for a 2,000 square foot house, okay?
No, not yet at least.
Back to the inflation.
Except for the drug dealers, they have a lot of cash.
Right.
So you have PPI tomorrow, CPI on Thursday. Is there any surprises that we can receive from either report that will change the Fed to start thinking 25 basis points to 50 basis points?
Only if the number, well, first of all, just to say where we are in the market right now, the probability of a Fed cut is 110%. What does that mean? It means a 10% chance of a 50 basis point cut, a 90% chance of a 25 basis point cut, that equals 100, and 0% chance of no cut. So that's where we're at right now. Now, we would need to see seriously weak numbers to put 50 on the table right now in terms of the inflation number. I don't think that's likely because I think you're going to see some tariffs in this data, that tariff prices have been starting to filter through into goods prices, and that should at least buoy it from being a severely weak number. So it looks like 25 is still on the table right now with an outside chance of 50. But yeah, I would be really, I think if anything, there's a possibility to go the other way, not all the way. The other way would be the numbers hotter than expected, stronger than expected. It won't get the Fed to hold, but it'll get rid of that 10%, 50 basis point, and you'll be solidly in the 25 territory.
Okay. So with that, let's start talking about the Fed. Big meeting next week. They're going to have their decision out on the 17th. You put something out on Twitter, though, because there's a lot of drama going on with the Fed. I'm not sure if you heard. I know Toby probably read about it in the New Yorker, but it was about with Lisa Cook. You have a different angle on the Lisa Cook drama. Can you explain to the audience what you put out publicly recently?
Yeah. So why does Trump want to get rid of Lisa Cook? Because she cheated on her mortgage. Okay, if you look hard enough, you're going to find that everybody does that to some degree or another.
Hey, gotta go. Is that the problem?
Yeah, exactly. So here's the thing: is that this is really not known very well. Now, I want to preface: this is a scenario that's out there. This isn't that this is what they will do. All the 12 Federal Reserve presidents, remember the Federal Reserve has 12 district banks, regional banks, Chicago, Atlanta, New York, Philadelphia, San Francisco, Dallas, that and the like. All of their terms expire at the end of February in years ending 1 and 6. So all 12 of them expire at the end of February 2026 in 5 months. Now, Now, this has happened for 100 years, and you've never heard about it. Because what historically happens is each individual bank has a board of directors. The board of directors approves the next 5 years for their president, and then those presidents have to get approved by the board of governors, the 7 Federal Reserve governors. And in the last 100 years, not one governor has ever voted no against any president. But in theory, Stephen Marin is going to have his vote on September 15th. He should be seated for the September 16th Fed meeting and vote for it because it'll get confirmed the day before. And if he gets Lisa Cook's seat and the Federal Reserve chairman, and potentially if Powell leaves, he gets that seat. But that would probably be after February, though, unless he leaves early or is fired early. But at a minimum, he'll have 4 of the 7 governors. So he could turn and say, okay, we have to approve all these bank presidents. And the one that's kind of on the hot seat is Austin Goolsbee. 4 of them could vote no, he's out. He's out. Chicago, go find another guy to put in front of us. And if we don't like him, we'll vote him out too. And maybe we don't like John Williams at New York. He's out. Or maybe we don't like all 12 of them and we kick all 12 of them out. So that is a scenario that's out there. Because why else do you want Lisa Cook's seat is the real question. Because you're going to get your rate cuts. It's not going to change that. So what else is there that you're trying to do? You're trying to set up the board so that it will be long-term thinking the way that Trump is thinking. So yeah, there's these types of scenarios out there.
But wouldn't this then have the rest of the central banks? Well, first off, obviously, our dollar, I don't know, every day I get a little thing on my screen that says it's gone down in value again. Wouldn't that create chaos in the currency market?
It could. It definitely could. I mean,
if it's a reserve currency, for all these
Yes.
other central banks. I mean, I'm long as hell, gold miners, et cetera, because of exactly the scenario that I read you talk about a while ago, which you just described beautifully, which is what if there is just an armed takeover of the Federal Reserve by people who want to cut interest rates, 150, 200 basis points, and essentially take the US dollar and throw it in a toilet.
Well, then you've just described why what gold's at $3,600, why
Yes.
crypto's moving higher, why the
Crypto
dollar
too.
has been weakening. Now, there is the pushback against this is twofold. One is this is a scenario, it's a possibility, but not a likelihood, right? That this doesn't come to pass, that he starts remaking the board in that kind of a radical transition. The other scenario is the yips scenario. Remember that Trump he went out Liberation Day with the big board saying all the tariffs everybody's going to pay. The market, I'll use some more technical language for you. The market shit the bed in the week after that. And then he came out and used the golfing term that the market got yippy. And so he kind of backed off the tariffs. So Trump will attempt to do this. Maybe he fires Goolsbee. The market freaks out. And then he says, okay, you're getting yippy again. We'll stop doing this.
So this is the taco trade, but it's for the Fed and bonds.
Right. So let me give you my to describe Trump perfectly about how transactional he is.
Yes.
There's a joke that supposedly is real that during Trump 1.0, some snarky reporter barked at Melania and said, "Melania, would you have married Trump if he wasn't rich?" And she turned to the reporter and said, "Would he have married me if I wasn't beautiful?" So, he's a transactional guy is basically what he is. And if the transaction isn't working, he'll just switch the transaction. So that my point is maybe he'll try and do this. And if the market's rejected, he'll stop. And so we'll have to see.
Jim, it's a really great point in that this is what makes it so weird now to make an investment decision over, let's say, a 30 or 45 day, period. Who knows? I mean, who knows? But who wants to be long? You look at the hedge funds right now, the amount of leverage they have, essentially betting on bonds coming, down in value, up. I mean, the yields coming down in value, going up in value. Boy, if the bond market shits the bed, then we get don't we get the same thing we had in early April when my Morgan Stanley trading guys called me and said, "Toby, do you realize that we just liquidated almost $400 billion of people who were betting long the market?"
Was that your account they liquidated $400 billion out of?
I used to live in a 10,000 square foot house. Okay,
it's 9,800 now.
I'm living in the backyard now. That's where it's
right. No. See that therein lies another issue that you guys might be better to talk about, because what happened during the freak out during Liberation Day was the market fell down. If you were a professional investor, a hedge fund, an institutional manager, you sold. But if you're a retail investor getting your ideas off of Reddit, you bought like mad. You bought into every downturn. And now we're 30% higher. Who won that trade?
Well, it's muscle memory, Jim. I mean, it's buy the dip has worked. I traffic the Reddit boards just to see what they're saying. Yeah.
They're almost to the point now where they're like, God, I hope that the data is terrible. I hope that there's like civil disobedience in the country. Right. Because I want to wake up one day to severely red markets, because I'm going to back up the truck and just buy the hell out of everything, because it always... Hey, look, we could laugh about it, but hasn't that trade worked like 100% of the time?
That 45-degree angle of the markets,
yeah. That was my other question, which is really, hasn't the market come to the conclusion that the Fed will always come in and save the day?
Because they've always come in and saved the day.
Because they've always come in and saved the day.
When have they not come in? Oh, one time they tried to not save the day. It was called Lehman Brothers.
Lehman
And
Brothers. Yeah.
and what did they do 2
Weren't
days
you
later?
working there at Lehman Brothers at that time?
I had left Lehman. I'd worked there before that.
Oh, really? Really? Okay,
Yes,
yeah. You
yeah.
just magically left 3 days before the thing imploded.
No, it was 15 years before, but I did work there.
All right.
But I was going to say, what I was going to say was they didn't bail out Lehman, but then 2 days later they bailed out AIG, and everybody said, "Wait a minute, that's an insurance company. You don't have any jurisdiction over insurance companies." Yeah, well, did you want me not to write the check to bail them out? No. You keep throwing money at them. Exactly. It's the way that and they've been bailing out everybody ever since. So they tried one time to not bail out somebody. By the way, here's another fun story for you about why did they bail out Lehman Brothers. This is supposedly another true story. Hank Paulson was,
yeah, go ahead.
Yeah, Hank Paulson was the Treasury Secretary at the time. Hank Paulson does not get along with his brother at all, and his brother was the Lehman Brothers.
No way! Come on.
There's that story. Couldn't you just not invite him to Thanksgiving dinner? Why'd you have to blow up the entire planet in order to do this?
Well, speaking of personal connections, though, I mean, you're in Chicago. Austin Goolsby's in Chicago. Do you guys interact at all?
Not really. I mean, I've interacted with him a little bit, but nothing significant.
Has this conversation come up though? Your scenario, what you think?
Yes, it's come. Not the reason. Here's the reason I bring up him. Why I bring up him? Why am I picking on him?
Yeah.
Because the other thing the Fed governors have to do is when a new president comes in, they have to approve him. No president has ever had a no vote. But when Austin Goolsby's name came up in 2023. Michelle Bowman and Chris Waller, the two Trump appointees, abstained from voting for him. And so that was the only time ever that they've even had an abstention. It wasn't a no vote. It was just an abstention. So they obviously had a problem with him in the first place, and they didn't want to vote yes for him. And so if there were already abstentions, and you bring in Marin, and you bring in whoever replaces Lisa Cook, and you turn to them and say, look, you weren't even a yes to begin with. How about we go no on this guy? It's not that hard to get them over the finish line to no, as opposed to somebody else. That's why his name comes up the most as far as a potential guy that gets kicked out. But look, we still got to get Lisa Cook. We still got to wait for the court to rule on Lisa Cook, because she's been fired. She is supposed to be, as of this moment, an ex-Fed official, but there's some talk that maybe she still has access to her email and, can still come to the Fed building.
Can she vote next week?
No, she can't. She can't. If she does, that's a fireable offense on Powell. And that's actually a big, because he does not get to decide who gets fired. The president decides that. And he has no say in this matter. But if the court gives him an injunction and says, no, you can stay at the Fed while we sort this out, she could vote next week. But I don't think either way it's going to make a difference. Whatever the Fed's going to do next week when it comes to rates, they're going to do. If they're going to cut 25 or 50 or whatever they decide to do, whether she's there or not there isn't going to really change the equation.
Well, Jim, you're the Fed whisperer here. So here's my question. If Trump essentially takes over the Fed, and Trumpism and Trumponomics takes over the Fed. Again, I go to the dollar value. Listen, our big tech companies are loving it, man. When you sell technology, to Europe, and the euro's down, and the UK currencies are down, and the Japan currencies are down, you're getting the same paid in the dollar, and it's a cheaper price for them because of the devaluation. So the tech companies love it. I think that's an underrated reason why big tech is stayed so well, is because the dollar's down. But what if the dollar crashes? You and I remember that.
Yeah, I mean, if the dollar crashes, that would change the equation. But will it? I mean, the closest we had to the dollar potentially crashing was right after Liberation Day. Remember, they called it the end of American exceptionalism.
Right.
But that only lasted a couple, about 3 weeks. And then the dollar kind of recoupled. In other words, what is the biggest driver of whether the dollar goes up or down? Interest rates. If interest rates are falling, the dollar weakens. That's what you're seeing right now.
Yeah.
The Fed's talking about cutting rates, and they're moving lower. Interest rates have been moving lower over the last, 3-4 weeks. So the dollar goes down. When interest rates go up, the dollar goes up. That seems to be the biggest driver. So what we're talking about is the scenario we saw for about a week and a half, where interest rates were going up after Liberation Day and the dollar was going down. We tried that for after Liberation Day, but it only, like I said, it only lasted a week and a half. So it would have to be something really significant in order to get investors to bail on the U.S. Because at the end of the day, it's easy for a bunch of, Frenchmen to say that they don't like the U.S. Yeah, well, the Mag 7 are here. They're not in your country.
Right.
The reserve currency's here. It's not in your country. If you want to own any of that stuff, and you do, you have to come here to do it. And so that's why it doesn't really last for a long period of time. It was only until Trump said that, the market got the yips that it started to back off. So yeah, if they're going to get really significant. Now, Powell put out a piece on Friday in the Wall Street Journal called "The Fed's Gain of Function Research." That they've had mission creep at the Fed. That they've been doing too many things. They started money printing in 2008 because of the financial crisis. Okay, fine. That was necessary. I'd argue that wasn't bad, but you did it until 2022. Right. It's like, all right, we solved the problem, but you did it for another 11 years. And they're over regulating the banking system. One of the things that has been, when a new bank comes in, they want a charter. You have to get a banking charter from the Federal Reserve. How many banking charters have been non-existent banking charters have been awarded since 2009? Like less than 10.
10, yeah.
They will not allow new banks. So they're overreaching. Now, the interesting thing is, if that's why you want that extra seat that Cook had, because you want to rein in the money printing, you want to rein in the burdensome regulations, you want to rein in, that everybody gets a bailout, and maybe reintroduce moral hazard. The time to do it is when you don't have a moral hazard.
Yeah.
Then that would make sense. I think the market would be fine with if that's what your ultimate goal is. But if your ultimate goal is to put Eric Trump as the Federal Reserve Chairman so that every rate goes to zero, then I think the market's going to have a problem with it.
Yeah, I think a lot of people.
Eric doesn't need the money now. Evidently, he's a billionaire.
Right.
Yeah.
Why would if his father turned to him and said, "Will you be Federal Reserve Chairman?" Eric Trump will turn to him and go, "Why would I want the pay cut?"
Well, yeah, exactly.
So Jim, is the scenario going forward in future? I mean, once we look to 28, 32 and beyond, I mean, it seems like just like every president does, they tend to, the political party in power tends to play chess with the Supreme Court. And
Right.
Now it seems like they're playing chess with the Fed. Is this what the standard's going to be going forward in the rest of the century?
I hope not, because it's just going to produce uncertainty and it's going to produce a lot of problems along the way, because there's a real risk that Trump winds up making a mistake. And I'll tell you what my biggest concern is. I've been arguing that interest rates are not like the stock market. The stock market is up is good and down is bad. That's everybody wants stocks to go up. They never want them to go down. And now we've kind of put interest rates into that bucket, that up is good and down is bad. Well, the problem with interest rates is they're an equilibrium level of where borrowers and lenders meet. In other words, what I'm trying to say is, for everybody that borrows money in the market, there's somebody who's lent money in the market. So for everybody who wants a cheap mortgage, there's somebody in Scottsdale, Arizona, let's throw out that place, who wants to buy a bond fund that gives him a reasonable rate of return. So interest rates should be more like an equilibrium level, and it's based on growth of the economy and inflation outlooks and the amount of bonds you're issuing. And I would argue that equilibrium level is somewhere around 4.5% to 5%, kind of where we are right now.
In the 10-year.
Yeah, in the 10-year. Trump says it's 1. And so what I'm afraid of is, if we go to 1, it's all offsides. So down is not always good. That's why,
right.
He famously had that thing where he put out that personal note to Paul, and he circled, here's all the countries, and look at all these countries over here that have like 0.5% or zero on their interest rates. And why do we have 4.5%? We're the greatest country. Everybody wants to be here and stuff. It's like, did you look at the list, Donald? All the countries that have 0.5% interest rates are a freaking mess. That's why they have 0.5% interest rates. And so he's making this mistake thinking that, no, down is always good. But usually if your equilibrium rate on your interest rates is down around 1%.
There's a reason.
There's a reason, and it's not a good one. And it's not a good one.
Yeah.
So sometimes 5% interest rates might actually not be a bad thing. Remember, there's a lot of people that are getting interest income. There's a lot of people that are paying. So you want your rates at an equilibrium level. And it's not like the stock market. Just go up, right? Just, number go up, like crypto's like that too. Number go up, just go up, 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 and down, down, down is bad. We're falling into the trap of thinking that that's the same thing with interest rates. Interest rates are not like that. They should be at an equilibrium level that's the most efficient for the economy, and that's not unnaturally take them down to too low a rate. We tried that. We tried that from 2010 to 2020, and it created a lot of problems in the economy.
Well, Trump also said, look at Japan. Their 10-year bond is 2.1%. Did anybody explain to him why that is?
Yeah. 15 years of deflation.
Yes.
And 15 years, and they've gone through about 30 governments over there because, everybody's so unhappy about everything that's been going on and all kind of strife in the country. That's why your interest rate is low. Like you said, Toby, there's a reason your interest rate's at 1%, and it's almost always never a good reason. Well, you want to know what his real problem is? So he thinks about it like he's like a real estate developer in Manhattan. Because he says we should have the lowest interest rates because we're the hottest country. Everybody wants to be here. We're the best country. That's the argument you use for Trump Tower should have the lowest mortgage rate because everybody wants to lease on my building and it's never going to be a credit rating. And the bank says, you know what, you're right. You've got the best building. You get the lowest mortgage rate. That's not how you set government yields. It's not a credit risk. The issue with the US having high rates is not because we're a credit risk. It's because we've got a faster growing economy, we've got risk of inflation, and we're issuing a ton of debt. That's why our interest rates are up. It's not because we're going to default or something like that. So like I said, he's thinking about it like a Manhattan real estate developer. I wonder why he's thinking about it
it's,
like that.
It's supply and it's demand. And in the middle, they meet, and that's how a rate is set. And the minute you jimmy jack with it, then the repercussions, sometimes we know, and sometimes we don't know. Right, Jim?
Right, exactly. And you saw the repercussions of that from 2010 to 2020. We kind of did that with zero interest rates and Europe going to negative, and their economies became a mess. They had a big populist movement because what you were doing with that zero interest rate negative in Europe was you were benefiting the rich and you were punishing the poor because the rich can take risks with their portfolios and they can invest and they can also see that their cost of money was cheap. The poor had to rely on bank accounts paying them interest rates and stuff because they don't get to do that stuff, and they weren't getting any interest. And you had populist movements, you had disparate economies, you had all kind of problems. And then coming out of the pandemic, you had massive inflation because of that as well too. So that was a problem that was there. Now I know a lot of people want to just say, well, it wasn't a problem because the stock market went up. Think of the cohort you were in. If you just say, if you're going to define everything as a non-problem because the stock market goes up, you're in a specific kind of cohort, meaning you're a wealthy person that only cares about the stock market, which is fine. I am too. But the majority of the country is not in the same position. The majority of the country just wants to get a decent wage, wants to be able to buy groceries without them going up faster than their paycheck. And that's the problem that you face if you distort interest rates, is you throw all that out of whack. And then they vote populist people like Brexit and Trump and everything else that we've seen.
Hey, so is it definitive now? Tariffs are not, they're a one-time inflationary event, but they're not a structural event?
Well, by the way, there was a news story, red headline that just flashed that the Supreme Court just said that they're going to take tariffs on the fast track, which means that we should be a couple of months away from a decision. They're going to try and rule on this as quickly as possible. So it might not even make it to December. It might even be before. before December. Now, the problem with the argument about tariffs are a one-time thing, has there been a week that Trump hasn't changed the tariffs? He's constantly tinkering with the tariff rates. If you tell me that he's done changing tariffs and they're going to stay the same
Right.
for a year or
I
two,
can say it.
then you could say it's a one-time thing. But the
It's not
Yale
a
budget,
one-time thing though now.
right. The Yale Budget Lab actually has a daily update on the average tariff rate in the country. That thing moves up and down faster than the stock market. I mean, so I don't know how you could say it's a one-time thing when it's not. It constantly changes, and it's constantly going higher is what it's doing.
When I started in this capital markets world, the thing that really got people get jiggy was chaos. And if love him or hate him, if you don't like today, just wake up tomorrow.
Right.
But for the bond market, again, the average American really does not understand how important the liquidity for a country that has 125% more debt than it does GDP, and liquidity is the whole thing. If China decides they're not going to buy another $500 billion of notes, over the next 3 months, who's going to buy them, Bianco?
Like I said, go back. You're going to buy them. You're going to buy them, and Todd's going to buy them. And we're going to put you down on your knees and just punish your investments until you say, that's it. Everything I own sucks. I just want a treasury security.
There you go.
Yeah, but you're right. Interest rates are the cost of money. Money is at the center of every economy. You need money to do anything, right? To buy things, you borrow money. What does money cost? That is an important thing because it's not a random number. It is basically based on the intersection of an equilibrium in your economy. And
when you put disequilibrium into the economy.
Right. And again, like I said earlier, you could do that either way. You could have your money could be too expensive or not expensive enough. If you're off your equilibrium number, even too low or too high, it creates problems. Different sets of problems, but it creates problems. You want it to be at that equilibrium level.
Hey, Jim, so before we close out the show, I just want to switch gears, step outside of the United States here for a second. I want to get your opinion on Russia. Treasury Secretary Bessent said that if we impose new sanctions, it's going to completely cripple the economy in Russia. Therefore, it should lead them to the negotiating table to end the war. What's your thought on this? What are the sanctions? Can you speak on them? And what is their GDP in Russia, though? I mean, would a sanction even hurt them?
All right, so I'll use another technical word: bullshit.
Okay.
There's only one sanction you could put. We've sanctioned Russia to
death.
To death. There's only one sanction that you could do that'll bring them to the table: oil. And what you're going to do is you're going to sanction oil, and you're going to tell every American, watch what happens at the pump. So you're trying to find a way to sanction a country, but not touch the oil price. And the answer is, as long as you let me continue to export oil and create hard dollars by exporting that oil and getting money, I don't care what you do after that. It's not going to bother me. So I don't know what they're going to do. They have stood on their head, going back to the Biden administration after they invaded Ukraine. They have stood on their head finding 16,000 different ways to sanction Russia, but not touch the price at the pump in the United States. And they can't find one. That's why I said bullshit. The only thing you can do is you could basically the only thing you could do is you could basically sanction oil. The only other thing you could do is maybe deport every Russian citizen, all the oligarchs that live in Geneva, Switzerland,
Fisher Island.
Fisher Island, or live in Malibu. Deport every single one of them back to Moscow. And then if enough of them scream at Putin, well, if enough of them scream at Putin, they'll all fall out of windows, and that'll take care of the problem right there.
Right.
But I mean, I don't even think that would work. So what I'm basically trying to say is there's nothing short of oil. And that's why and like I said, if you want to sanction oil, then you got to explain to the American public why the price at the pump is going straight up.
Right.
And that's just not going to work.
Interesting.
They have leverage, and they know
Right.
they have leverage.
Yeah.
Right.
And they know that in areas where people vote versus Russia, the people are going to vote with their feet and their dollars, and so they have us. Unless we can get maybe we could just do a email to every American over 18. Are you willing to pay $2 more per gallon? No, we're not.
Yeah.
Yeah,
So just
exactly.
save us the trouble and just
Yeah.
Right.
let's not kid ourselves.
You're right about that. All right, Jim. Well, you said it all. You always do when you come to buy, hold, sell. We always
Yeah,
enjoy hearing your thoughts.
Bianco. First off, he gets to throw an F bomb and a D bomb and a G bomb. You
Well,
can't do that on CNBC.
And I
Well,
just
that's
checked
only
Twitter.
because I'm just still hot about my football game last
Oh,
night.
Yes,
I know.
you are. Yes, you are. And I just checked Twitter, and there's a hashtag holy shit moment is actually trending right now. It's unbelievable.
All right. Well, hopefully we'll have one.
There you go. Jim, thank you so much. We do appreciate it. We know you're busy, and we know you're going to really be busy next week with the Fed decision on the 17th. And coming up next on Buy, Hold, Sell, we have Barbara Durant. She's going to be joining the show. Definitely want to hear what she has to say as well with Toby and I. So on behalf of Jim Bianco and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Bianco rules. Bianco rules.
Buy, hold, sell, brought to you by CrossCheck Management.